recording. We can get started. Hello.
You're recording.
Okay. Yeah. So welcome. Let's discuss the potential implications of the CPI print tomorrow. The reason why we decided to have this sort of impromptu call is this sort of sets in motion, or not sets in motion, but could potentially set in motion events over the next 2 weeks, or sort of kicks off, a 2-week period of potential high volatility. So we've got the CPI tomorrow, and then earnings season starts properly Thursday, Friday. I mean, there are some reporting before that, but big names start reporting towards the end of the week. And then, of course, we have the rate hikes on the 27th, and the GDP data will be released on the 29th. So we just wanted to get together and have a little talk about what we could see happening, first off, based off of the data that comes out tomorrow, and just see what scenarios could be in the cards. It's not very formal. We can just chat here together. I put the charts that I took together for ETH and BTC, and one of the reasons why I thought it would be important for us to talk prior to the CPI is that if you have a look at the BTC chart, essentially, the last two ranges we've been playing in broke right after the CPI data was released. The last one was formed. The last one was formed during the May release and broken during the release in June. So, what are your guys' thoughts here? If you see the updated screenshots that I just posted, those are the daily candles for ETH and BTC. We're trading at the very bottom of the range already. I personally draw parallels between what we see in this range versus what we see in the previous range. We had 3 candle closes in a row, 3 red candle closes in a row. I don't count those top 2 there, but 3 proper red candle closes in a row, which is the same thing that we had heading into the last CPI. And we're already trading at the bottom of the range. So I think it could be very, very interesting tomorrow if the data comes in hot, which I have reason to believe it will. The White House press secretary came out yesterday and essentially said as much. So yeah, I'd like to get your guys' opinions, because the way I see it is what could end up happening is we get a hot CPI print, then we start to see major names falter on earnings, possibly as early as at the end of this week. If we get a hot CPI read, then I think we'll have a replay of the scenario that happened last time, which was we get a hot CPI read, then the markets start to rumble, rumors start going around, wondering whether, last time it was, okay, 50 basis points was set in stone, right? And then, oh wow, people got jittery. It could be 75. And then it ended up indeed being 75. And there was a lot of selling off during this period because of that scenario playing out. So I think we could have a similar scenario now. CPI read comes in hot. And then people start wondering whether they're going to do more than, or whether they're going to do 75 again, or possibly 100. And then, earnings might start to falter. It could get very, very rocky, in my opinion. It wouldn't surprise me if we saw a sort of downward cascade. I mean, potentially almost throughout the rest of the month. And the GDP data comes out for Q2 on the 29th, and I would believe that, we're currently in a recession. It just has to be technically announced, and that it will technically be announced on the 29th. As Mario had pointed out the other day, the Atlanta Fed revised their GDP estimates from 0.3% growth to minus 1.2, and then the day after that it was minus 2%. So, I think there's a very real possibility that we break this range for BTC soon. I don't see it being out of the picture that we're trading at 12 to 14K by the end of the month. And we had similar conversations ahead of the last CPI, and I didn't want to get too hyperbolic with ETH, but I did mention it, I believe, offline to somebody that, or perhaps on a voice call, that I could easily have seen ETH going to 1400, which it did, and then just kept going from there. I think we could also easily see ETH break this level and find support quite a bit lower. Very curious as to what you guys think about the next couple of weeks and what you think we have in store.
I just want a quick talk on CPI. I think estimates very potentially could be actually lower than what it comes in at. And I think looking at the White House again, you look at what they did last month, the days leading into it, give warnings. They're doing the exact same thing again. They obviously know the numbers already, and I wouldn't be surprised to see it probably in the nines. Gas, energy was huge for the month of June. I do want to point out one possible, positive is that while I think you have probably your everyday investor who will look at CPI change and kind of induce some fear, they're like, oh wow, look, is a lot of other experts are trying to get people to maybe look towards core CPI a little bit more, just with the massive inflation in foods and energy last month. It excludes those in core, and it has been trending down, and it's again expected to go down for this upcoming month. Last month was 6%. This one's looking at to be around 0.6, sorry, 0.6 for core CPI. And then I think it's looking at 0.57 for this month release, which could signify like a trend. That'd be 3 months in a row that core CPI inflation, which they say technically peaked back in March, is kind of like the lead indicator, because all these are kind of looking back, right? You have gas and food expenditures saying they're going down significantly. I think only 9 states currently have gas average price over $5, which could signal a massive relief in CPI in August. So I still expect it to be very high. I think probably estimates will probably be lower than whatever this month will obviously be. I don't know how low. So I'm one of our other team members, Louisville posted, his bullish. He's getting bullish. I'm not necessarily getting bullish. I am looking at the possibility that after this CPI and I'm not 100% sure they'll fully price in the 75 rate hike before it happens. So I still see some red even after that at the end of the month. I think it leads for probably an excellent chance of catching a very good reversal. I don't mean reversal out of the bear market, but I'm talking like a bear market rally. It's something I'll be looking for. I do know while it has been very negative in terms of puts on like SPY and QQQ, there are additionally a lot of hedge bets being placed too, and it looks like people are maybe anticipating a local bottom because of more CPI. So, kind of some of my thoughts.
So I'm curious because, I'll be honest, the one thing that is sort of nagging me in the back of my mind is what happens if and when we get a bear market rally. What is your feeling? Do you believe that's imminent, or are you talking at sort of end of the month? Because
I say end of the month, August.
yeah, okay.
I would put all my chips on the month of August for sure. I you should get a decent CPI reading. No
I agree on that.
no FOMC. All you're gonna have is FOMC minutes, which if it becomes even slightly dovish in terms of maybe cooling on the rate hikes, not in terms of cutting. I don't see that happening. But they're looking at more of like a 50 or back to 25. You could see an extended rally going into the next FOMC. But one other thing that's really is like, you have the dollar, right? And everything kind of is playing into the dollar's hands. So, I mean, as long as the dollar keeps pumping, stuff's going to hurt. And it doesn't look like it's stopping. You have Russia cutting off the pipeline for, the annual maintenance type stuff. And Europe is completely scared they'll never get that turned back on, which would send Europe into an energy crisis. You would probably have the euro tank further, which, I mean, the dollar will just 120s, here we come, And so you still have things weighing down on assets themselves. So there are negatives out there. I guess I can't say I put all my chips on a pump, but
No, but
definitely possibilities.
I do agree with the thesis that if it were to come, that timing that you're talking about makes sense.
Yeah.
I think that this Nord Stream thing could potentially turn out to be a significant disaster. If anything goes wrong there, then I think that could be potential catastrophe. So this turbine and these parts that are needed from Canada,
Mm-hmm.
they were supposed to be delivered and ready to go prior to yesterday. My understanding is that they arrive, or either arrive or will be sent off in 2 days. So I would assume that at the very least that the maintenance, which was scheduled from the 11th to the 21st, if I recall, will be delayed by a few days. But I share your sentiment there as far as the dollar is concerned. If I recall, the DXY is 56% based on the euro. And if they do cut off Nord Stream for some extended period of time, which, I mean, strategically, it could be a very good tactic to shut it off, right? I mean, there is war in the area, and it's a complicated situation, but it wouldn't surprise me in the slightest if the Russians do, if they're, quote, unable to fix it for some reason, let's put it that way. And then, yeah, I would see the dollar continuing to shoot up and assets play along with that. Also, just in a broader sense, maybe this is taking it too far, but maybe this is a longer conversation, but there's so much happening now, just in the span of the last week or so. That I have a feeling that things might get very uncertain if these trends continue. I mean, we had the Prime Minister of the UK resign last week. Now there are calls for Macron to resign. I don't know how serious those are. The fellow from OPEC mysteriously passed away a couple of days after the OPEC summit. The Sri Lanka thing, although that's not major importance. Then there's apparently this drill that we were discussing the other day. From what I hear, Iranian warships will be right off the coast here actually pretty soon. There's just a lot happening that could very quickly escalate a downturn, in my opinion, if we start to see some type of massive downturn. Oil prices dropping quickly. I think the extent of the potential volatility that we might experience it might be greater than what we're expecting, is basically what I'm getting at. I'm hoping not, but things look very uncertain at the moment to me.
Yep. Yeah, volatility is picking up too in the market, so like it's kind of playing into some of that uncertainty. Like the VIX potential breakout again, where it's currently at. And if it would, like it would, you're retargeting the 30 levels again for the VIX. So, yeah, I think there's I mean, the negatives are definitely there. Even with the scare of the fake CPI report or whatever, but it's very clear that a lot of bearish activity in the market going towards close of today. Lots of puts bought. The put to call ratio is very large right now. Yeah, there's a lot of things pointing towards significantly lower prices, but change. Minute, who knows?
Mm-hmm. Well, and I mean, chart-wise, we've got a similar situation where we've got the range, we've got the wick that was created at the beginning of the range, to the left, the wick's unfilled. To me, the ranges look, and the activity in the ranges looks quite similar as they did, leading into the last one. So it wouldn't surprise me in the slightest if it comes in hot that we get a similar scenario, playing out.
Yeah, if it comes like in too hot and they didn't like people aren't accounting maybe for the increase in other prices outside of the energy sector, because I mean a lot of people are saying like gas is taking up like a very large percentage of the reason why this one's going to be so high, and if it comes in still like the nines, but core CPI rises a little bit and it actually does worse than expected, then I think you have a full-on dump. I don't think it's good. If core CPI rises, I don't think it's anticipated to. They're even saying it could come in lower. So that's what I'm probably going to be watching for tomorrow. Got anything else, Kong?
That's pretty much it from my side. But I was just curious to see, if others were seeing it along similar lines, or if perhaps there was some viewpoint
too
same. Or
bad of a reaction from earnings this week. It's banks, the big banks, but I think we should probably be okay with the banks. It'll really be next week. Those, I guess, we could see some price impact in equities if some of these companies start coming out with lesser than expected earnings.
Yeah, I don't necessarily believe the banks will come in bad, but it just feels like if it comes in super hot tomorrow, it could set off like a domino effect for crypto. If it comes in super hot, if the stock market then doesn't pick up by the end of the week,
Yep.
other earnings the week after, like I think yeah, I think we could have a potential domino effect scenario.
Yeah, I agree with you. Absolutely. And then FOMC, I'm not expecting too much to come out of that. I fully right now my expectations are 75 points for them to remain hawkish. Um, I have started looking more at interest the interest rates, them paying off national debt, some things like that. But think there's other things that are kind of out there that will keep them remaining pretty positive in terms of like their that they can keep raising rates. I mean, unemployment is still really low. Record job growth, payroll. I think that those were the two big things last Friday that really set this whole downturn off. It completely took away any hopes of the Fed for the near term pausing what they were going to do. You know.
Yeah, and when we were heading into the last CPI, they did a similar thing, right? Where they warned about it, and then I thought, all right, well, maybe maybe the markets have braced for it. Maybe we don't go down, right?
Mm-hmm.
And I remember trading it in the morning, and price even started to go up between like 10 and noon. And I thought, okay, well, maybe the markets were prepared. And then it essentially dumped for 8 days straight, and people took those that speculation seriously about a potentially higher rate hike. And I was hoping we'd be at a higher price point now, so I could bet on that scenario playing out. I'm not as confident in making bets on that with us at the lows, but
Mm-hmm.
I could just very easily see a similar scenario play out. That's basically my conclusion, is that I could very easily see that same type of situation playing out. Markets get scared because rumors start to swirl that they might do a bigger rate hike than expected, and then bad earnings, and it could just be a perfect storm for for a lot of red days before the end of the month. And then if nothing catastrophic happens with Nord Stream or anything geopolitically, then yeah, I could definitely see a scenario where we finally get some relief towards the very end of the month, or into August.
Yeah.
What are your thoughts, Louis? Since you mentioned that you're bullish.
Think that I don't know. We don't see. I mean, since they're already saying that CPI is going to be higher, basically, uh, if the numbers aren't as bad as they think, or as we think they're going to be, or if they're not worse than expected, I think we could have like a short term rally. But
Oh, they
I
come
don't
in.
know.
Yeah, if they come in better, absolutely. Yeah.
I think that probably going to still dump off the news tomorrow. Probably dump maybe throughout the week, and then Mike Harsh was talking of possible like bear market rally towards the end of the month. That's what I'm thinking. That's what I mean when I'm bullish. I'm not necessarily thinking price is going to reverse tomorrow, but sometime within the next week or so, I think we might find a local bottom and then shoot up to the mid 20K area before we come back down.
Mm-hmm. I definitely agree. If it happens to come in lower than expected tomorrow, I think we'll probably rally immediately. I mean, I don't know how far we would go, but I think the markets would definitely react very positively to that. Yeah.
Yeah, I'm not in any trades right now. I'm kind of just sitting back and waiting to see what happens tomorrow before I start making any moves.
Yeah, same here. It definitely would have been wise in hindsight to get in once the press secretary came out and said what she said. But now ETH has dropped like 12% in the meantime. Odds are I'll still probably go short immediately upon release if it comes in hot. But I would prefer to see that we get some type of overnight pump prior to that. Because, despite high odds, one doesn't necessarily feel that comfortable shorting at the lows. To me,
Yeah,
I
I
just
don't
look
either.
I just look at the charts and I go, okay, well, looks like a very similar scenario. We've got the wick, we've got the 3 red candles heading into the. It looks like a rinse and repeat scenario to me.
Mm-hmm. Yeah, the daily on Bitcoin is ugly.
Yeah, I do think if we do drop from here, though, we'll probably go at least retest the 17.6 area again. Maybe a little bit lower, like into the 16K.
Yeah, I think we at the very least fill that wick. I mean, where the last candle basically at support on these levels and below that, there's just the wick, and with ETH, it's below the the candle body support. So I think the wicks get filled here in the very, very near future. Probably tomorrow if we get that print.
Yeah, I think that's a good little outlook, man. We'll talk.
Mm-hmm.
We'll go deeper in depth Thursday. Talk some stuff. I think we're also gonna talk
Absolutely.
some stable stuff too. Yoshi and I have been talking. We talked with Louis about some stable coin concerns.
Yeah.
Yeah. Let this data come out today or tomorrow, and then Thursday PPI comes out, and unemployment, I believe, too, if I'm not mistaken. So take a look at those.
Say that last part again.
PPI and unemployment, I believe, Thursday.
Yeah.
Then
So
have our little roundtable discussion.
let's do it. Well, good to hear you guys' thoughts. What's that like? Sorry.
I was about to say, I think this recession is going to be a little bit different when it comes to like unemployment because there's so many job openings still.
Mhm.
Like, there's not like good quality jobs really, but there's still a lot of jobs to be taken. So like, even when people start getting laid off and stuff, there's still going to be jobs available as opposed to like previous recessions where like jobs are like really hard to come by, like any job.
Yeah.
Yeah, so there's some weird stuff going on with the jobs data. Did you guys see that about, there's still a lot of availability, but if I recall, there's record numbers of people with 2 jobs. So there's some very funky stuff going on with that data from what I understand.
Yeah, I know they definitely been fucking with the numbers a lot, but there still is like a lot of job openings still.
Yeah.
You could already argue we've been in a recession for the whole year.
Well, I think that's going to become official on the 29th, because once you have 2 quarters negative growth, then we're officially in recession, and that announcement comes on the 29th, and I don't see how we don't get the second quarter of negative growth. then yeah, we will have been in a recession this whole year, and I don't see how there's any getting past that when it comes out. I don't see how that would happen. Oman, anything you'd like to add, Princess Bowser? Before we
Thanks for doing this, Logo. I think it's good.
Yeah.
It's good. You know, just a little right before it happens. So.
Yeah, just kind of bounce the ball back, back and forth between us to get our different takes on it, especially in case one is intending to take some decent trades off of it, and in case there's anything that one is overlooking, it's always good to get a feel for where people are at.
Yes, it's definitely nice to hear this information when you're not able to necessarily follow all of the macro. So for doing this.
All right, pleasure. Yeah. Well, should we follow this up on Thursday?
Yep. Sounds good.
Sounds good. All right. Thanks, everybody, and catch you on the Trader channel in a little bit.
All right then.
Okay.